Good evening, class. Hope we are all well and we've had a good day. Pardon me, the previous time we met, I went off abruptly. I had an unstable network, but hopefully we're able to follow through the assignment that we're given. We are supposed to prepare journal entries for Lokodo. So we are going to present our journal entries, then still we shall go through them as a group in this class, but each one of us is going to be called upon to present to the class. Then we can discuss or ask questions where we still have some queries and gaps. So let me just quickly share the question again. I shared it on the group, so let me just share it again. This is question number 2, Lokodo Eric. It's what we are going to look at, the journal entries for Lokodo Eric. Anyone who is willing to start off? Anyone willing to start off?
I can start. I'll just give the first two. Am I giving everything or just a portion of it?
We expect you to give everything, but you can present what you prepared. It's okay.
I wasn't prepared everything. Okay, so August, 1st of August 2020, you debit the bank with 2 million and then debit cash of 3 million and then credit capital 5 million. Then, should I continue?
Please do, please do.
Then we debit rent, and then on the August 2nd August of 2020, we debit rent of 800,000 and credit the bank. Then on August 3rd, we debit purchases with with 3,660,000. Sorry, I think I've gone off for a moment. Just give me a moment. Someone can continue from there. Just give me a moment. My things have first gone off. Just give me a moment. Someone can start from there.
All right, thank you, Martha. Anyone who's actually from where Martha stopped, you start from the beginning. Just present your answers the way you have them. It's okay. You don't need to have everything right.
Maybe I can give this a try. Seems the debit and credit is still confusing me, but we shall get there anyway. Now, for capital, which is 5 million cash. On my side, I credited it. Then I understand the 2 million was an account was opened and 2 million deposited there. So it is an increase in the money that went to the bank account. So I equally credited that. Then I made a debit on the cash account. Then I debited the rent account, and given that it was paid by the bank, I credited the bank account. On 3rd August, goods on credit from is it a Briga's account? I debited 1.52. Then there was also a transaction for goods on credit from for E2 account, which I also debited 2.14. Then another transaction was done on the 6th of August, sales account, but there was sales on credit to Lamek. I credited 4 million. Then on the sales account credit to Kamoga, I credited 3.12. Then still on 10th, that transaction was on 6th. On 10th August, on the sales account on credit to Chagulanyi, I also credited 1.64. Then on August, this date, I think it was 11th, on cash account, we received, I made a debit of 300, I made a credit of 340. Then I debited the bank account 340. Then 20th August, we got a return of some goods from Lamek and Kamoga. On there, I debited 324 returns on Lamek's account. Then I debited Kamoga's account's returns on 360. Then we received monies. There was payments on a discount of 5%. I deducted the 5% discount. That was for Abiriga's account and Atu's account. So there I credited 1.444. Then on other bank account for Atu, also less of 5%, I credited 2.033. Then on the 25th of August, cash account of Chagulanyi. Yes, cash account Chagulanyi, that is 24th August. I made a debit of 1.64. Then on 26th, then also we have a bank account for Lameka. I also made a debit of 4 million. Then there was an expense of rent. Which I made a debit of 200,000 cash account. On 28th, there was an expense on the motor vehicle. And for expenses, I also debited that 260,000. Then we had an increase in assets by purchase of a motor vehicle. So the motor vehicle account, I also debited 10 million. Then the last transaction was I think on 29th, which was payment of salaries. I think 30th salary account, I made a debit of 1.12. Those are the transactions that I have, subject to further clarity and guidance.
Thank you, Nicholas. Okay. Anyone else who is ready to present? We've had Martha, we've had Nicholas, Bazile, Hamisi.
Good evening.
Good evening, Gloria.
So before I present, I want to first be sure from the transactions, there is one for October 6th. Was it meant to be October or August?
August, that was a typo.
Okay, that's okay. Okay, now let me present. Title first, Lokodo Eric, business. Journal entries for the month of August 2020. Then the table, it has the dates, particulars, debit, and credit. For the 1st of August 2020, we have the bank account, which was debited 2 million. Then I have the cash account, which was debited 5 million. Then the capital account, which was credited 7 million. Then 2nd August, they paid rent by check for 800. So I have the rent account, which was debited 800. Then, since it was paid by check, the bank account was credited 800. Then 3rd August, bought goods on credit from Abiriga and Itu. So I have, on 3rd August, I have 3 accounts. I have the purchase account debited at 3.66 for both the transactions, Abiriga and Itu. Then I have Abiriga account, a creditor, credited at 1.520. Then Itu account creditor, credited at 2.140000. Then with a correction, I have 6th August 2020. Sold goods on credit to Lamech, 4 million, and Kamuga at 3.120. So I have the sales, I have the sales account. I have the sales account debited at 7.12. Please note, my table it has the extra zeros, so I'll be mentioning the first figures. I have the first account as sales account debited at 7.12. Then Lamech account at data credited at 4 million. Then Kamoga's account at data also credited at 3.120. Then we have the next transaction was on 10th August. Sold goods on credit to Chagulan. The transaction, it has the sales account and the sales account debited at the sales account debited at 1.640. Then Chagulan's account at data. At data credited at 1.640. Then the next transaction was on 17th, cash drawings for 340,000. So in the journal, I have 2 accounts. I have the drawings account, which is debited at 340,000. Then the cash account credited at 340,000. The next transaction is on 20th August. If I'm still audible. The next transaction was on 20th August. Goods returned by Lamech for 320. Goods returned by Lamech for 320 and Kamoga for 360. Oh, yes. I have 3 entries. I have the sales returns account for both the transactions at 680 debited. Sales returns account was debited at 680. Then Lamech account, being a creditor, his account was credited 320, the other side. Then also Kamogas was credited at 360 on the side of credit. Then the next transaction I have was on August 24th. Settled the accounts of Abiriga and Ito by check, less by 5% cash discount. So I have 6 entries. I have 6 entries, so I'm going to start with the one for Abiriga. I first made the calculation to see what's the 5%. So I have Abiriga's account creditor, Abiriga's account, the creditor, being debited at 1.520. Then discount received, since he paid at 5% less. So he received a discount. Discount received at 76,000. Then bank account, since he paid by check, also credited at 1.444. So the discount received account and the bank account are both credited. Then I have Itu's account, being a creditor, at creditor, I debited 2.14000. Then I have the discount received account, credited 107,000. Then the bank account credited 2,033,000. It's still a lot. Do I have to finish?
If you're comfortable finishing, but if you're not, you can stop there.
I just feel like I've been going on for so long, so we can give another person a chance to also present what they have. Okay, at the end
Where
of the
did you stop?
transaction,
Okay, at the end of
I
the
balanced it. Yes, at the
Mhm.
end of the transaction, I balanced it. The debit has 42,120,000. Then credit also has 42,120,000.
Okay.
Yes.
So which date did you stop?
I stopped on the 30th. The last date, 30th of August.
No, in your presentation now, which presentation did you stop?
Oh, I stopped on the
24th?
on the 24th.
Okay, thank you very much, Gloria. Anyone who can carry on from the 25th? Anyone who can carry on from the 25th up to the end?
Good evening.
Good evening.
Oh, okay. To continue from the 25th, I debited sales account with 1.64 T, and I credited Chagulanyi's account with the data. I went on the 26th, where I debited the bank account with 4 million and credited Lameka's account with also data. I went on to the 27th, where I debited the red account with 200,000. Then I credited cash, the cash account with 200,000. Then I went on the 28th for the motor expense account, where I debited the motor expense account with 260,000. Then I credited the cash account with 260,000. On the 29th, I debited the motor van account, which is an expense, 10 million, and I credited the bank account with 10 million because they paid by check. Then I went on to the 30th of August, where I debited the salary account because they made payment, and I credited the bank account because the payment of the salaries was made by check. Yes, that's all.
Thank you very much. Thank you very much for sharing. For the rest of us who have not shared, we still have chances. We still have T accounts. We have the trial balance. So we thank our colleagues who have presented today. Now we need to dive into the answer itself. And most of the entries have been correct, by the way. They've been correct. We just need to add flesh to them. But before we start that, I feel I need to just bring out and make clear certain things to you. Let me just share a sheet here. Just go back. I'm going to just be slow this time. You can write in your notebook somewhere. We have our debit side. We have our credit side. So on the debit side, I told you we have 3 elements. Our assets. Then we have expenses. Then we also have drawings. But these drawings are normally for sole business owners. I think you had that introduction of different types of business. So under assets, we have, and when I say the debit side, it means when an increase happens in any of these, either an asset or an expense or a drawing, we debit. We debit that asset, we debit that asset account, we debit that particular expense account, which is maybe rent or there is a purchase happening, or we debit the drawings account. Now under assets, let me just be detailed more. Under assets, you have current assets. And under current assets, you have trade receivables. Trade receivables are also debtors, people you're demanding money from. Maybe you've supplied goods on credit. These are debtors. For example, in the example we've had, I think it was Lamek and Kyagulanyi. Those are debtors. And it means if we sell goods on credit, for example, if we have that one customer, Kyagulanyi, and we sell to him goods on credit, it is a current asset. We shall debit Kyagulanyi's account. We shall debit Kyagulanyi's account. We shall not credit it. It is an asset. Then the other, under current assets, we have cash. We have bank. Under cash, we also have petty cash. Actually here, you can have cash on hand. Let me put petty cash on its own because sometimes it's easy for you to, petty cash always has its own account. Cash. We have bank. Any other current asset that you know? Any other current asset? There is one common current asset I want you to tell me. The most common one. apart from cash and bank, there is a very common current asset from your purchases. Anyone in the chat?
Stock account.
I beg your pardon?
Stock.
Okay, thank you very much, Bruce. Yes, stock or inventory. Very common. Stock, stroke inventory, it's all the same. So those are examples of common current assets at your level now, where you're at. So it means for any transaction where any of these is appearing, whether it's a trade receivable, which is a debtor, actually debtor, i.e. goods sold on credit. I want you to understand everything from first principle. Goods sold on credit, okay? Whether it's cash, petty cash, bank, stock. If it is receiving money or it is increasing, for example, I've given an example, you're selling more goods on credit. You debit. You have received cash. You have withdrawn money from the bank and you have it in your hands. That is cash. You will debit cash, which means cash on hand is increasing. You have withdrawn money from the bank, or you have received a payment from a customer for goods sold to that customer and they've paid in cash and you've not banked that money. Cash has increased, you debit cash. Petty cash, you've picked money from the bank and you put it in your petty cash account to run the day-to-day business of your organization. The border transport, the small purchases. It means you will debit petty cash account. You have deposited money in the bank, or you've received maybe a transfer into your bank account, or someone has deposited a check there, or you have deposited cash there. Bank is receiving, you debit the bank. You have purchased inventory. These are not purchases. This is inventory. But in this case of what we are dealing with, the journal entries, you're not going to see a lot of stock or inventory. It will be just purchases. But for your statement of financial position, you find the inventory there. So you had maybe in your stock, you had 100 pieces of an item, and now you have 200 pieces, you've had 100 more. It means your stock has increased. It is on the debit side, okay? But for this first time, journal entries, please don't mind about that. But have it in your mind as you move forward. Now we have non-current assets. These ones are the most common ones. Non-current assets. We have non-current assets. And here we have things like land. We have buildings. Actually, normally land and buildings are combined, but I can do that. Land and buildings. Motor vehicles. Equipment. etc. Sometimes even you have some intangible assets, which we shall see also as we move on. Intangible assets I can give an intangible asset, an example like a copyright. I see one of us here, I think is a lawyer. A copyright is an intangible asset to a company. It falls also under non-current assets. So those are the assets. Let's look at the expenses. Under expenses, you're going to have various examples of expenses, and they will be mentioned one by one. But I'll start with purchases. When you purchase, you expense, but also you're buying inventory. So that's why it is justified that purchases, when you purchase, you debit the purchases account. Then you have other expenses, e.g. rent. You have your rent, you have transport, you have salaries, insurance. What else is usually common? Stationery, etc., etc. So whichever expense is mentioned in your transaction and an expense is done, you debit the expense account, that particular expense. If it is rent, it is the rent account. If it is transport, it is a transport account, not expenses account. Please note that. Because we shall need to get the balance. We shall balance off that particular expense account. For example, if it is a rent account, we shall balance it off, and that balance will be taken to the profit or loss, which is also called the income statement. Expense there in our final report. So that's why each account, each expense account is reflected alone if you're preparing a T account. And also if you're preparing your journal entries, please reflect that expense account on its own. Don't be tempted to add rent with transport with any other expense and you give us one figure. You reflect each account on its own. Okay, those are expenses. Drawings are just basically, let me just give a description here for drawings. A simple description. Simple description is money taken out by business owners, personal use. Other than business use. Okay, that's how simply I can describe drawings. So the other side of this means that, for example, if I have a debtor, a trade receivable, and this debtor pays me money. For example, I am demanding 10 million from this person. I sold goods worth 10 million and I'm demanding them that money. When they decide to pay me 5 million, I will credit the trade receivables with that amount they've paid off. It means I'm decreasing this trade receivable. Remember, it was 10 million. It was 10 million. And this person paid a minute. Remember, it was 10 million. And this person paid 5 million of the 10 million. So it means my balance is 5 million. Hence, I have decreased this 10 million by 5 million. That's why I'm crediting that trade receivables account. Cash. If I have my cash on hand and I take it to the bank, I've taken money out of my cash. I credit cash by taking out that money. I take out that money by crediting cash. If I expense it, maybe I've expensed it on transport, on stationery, on purchases, I've taken out money of cash, so I'll credit cash. Same for petty cash. If there are any expenses, I'm paying for transport, I'm paying for some foodstuffs, I have to credit petty cash. Money is coming out of petty cash. Bank, if I'm paying out people, maybe I'm making bank transfers, I am paying out by check, I've withdrawn cash from the bank, I'll credit the bank. If stock is being sold out, I'll credit this account. I'll credit it. These land and buildings, I didn't explain. If I'm buying more land, I will credit it. I will debit it. If I'm buying motor vehicles, I'll debit this motor vehicles account. If I'm buying equipment, I'll debit. But if it is being sold, it is being disposed of, or maybe it is being depreciated over the years, I'll credit. I'll credit this motor vehicles account with that depreciation. Purchases. Purchases don't have the other side. It is either purchases account to profit or loss or something. It never has. Now I'm taking out purchases. Okay, there are returns outwards and all that. You balance them off, but it is okay. It is more, returns outwards is more in stock. So rent, all these are expenses to your profit or loss. They don't have the decreasing side of it. There is no that other side. And we are going to see that also for what? For revenue or income when it comes in. Okay. So friends, I would want to confirm, are we together up to that point? I would want to see your confirmations in the chat.
Yes, we are together.
Okay, one confirmation so far. Nicholas has given us a thumbs up. Swaba has given us yes. Bruce, yes. Salome, yes. Okay, so it means also our other colleagues are on board. I don't want you to take debit credit as simple as it looks. Even us who have been in accounting for years, before we debit and credit, we first think. You first think, am I doing the right thing? Am I doing the wrong thing? So if you don't get it at this point of financial accounting at the beginning of the course of CPA, you're going to suffer throughout. But especially in this financial accounting paper, because the examiner is basically testing you on double entry. That's why we take time on it. So I pray that we are all on board. At least we are getting there. With more practice, we shall be able to get there. But I want you to have all this at the back of your mind as we are doing the journal entries, as we are going to construct the T accounts, as we are taking figures to the trial balance, because the more we go on, we keep on advancing. We keep on taking a next step. We keep on taking the next step. And if you've not picked at the first point, you'll get confused in the next steps. So since you've given me a thumbs up, let me go to the credit side. So on the credit side, you have liabilities. You have liabilities. And in those liabilities, you still have your current liabilities. Have your current liabilities. And under here, the first one is your trade payables. Your trade payables. And these are creditors. Creditors, i.e., goods bought and credit. This side you're selling, this side you're buying. For example, you bought from a supplier. In this particular example, we have Itu. They bought goods, Lokodo bought from Itu goods on credit. He's a creditor, he's a trade payable, he's a liability. He's demanding money from Lokodo. You have loans, maybe from the bank or that. Actually, what I forgot here, which I need to add for you that I've remembered here, we have prepaid expenses. Prepaid expenses, for example, you have a period running from January to December 31st, 1st January to December 31st. And those are 12 months. Let me use an example of rent. But you have paid rent of 18 months. For example, rent is meant to be rent. Your rent is 1 million per month. But you have paid 16 million. Not 16, it's 18 million. For that year. But the reporting period is 12 months. So it is supposed to have 12 million. So your prepaid rent or prepaid expense is going to be this 18 minus 6 million. Minus 12, 6 million. So which means it comes as a current asset. You have prepaid rent as a current asset, but that goes to your statement of financial position. We don't need to go there right now. Sorry about that. So it becomes a current asset. So let me also show you this other side. So this side of current liabilities, we have what we call accrued expenses. Let me use the example of maybe salaries. Salaries, maybe you're supposed to be paying You're supposed to be paying. You must have paid maybe salaries of 50 million for that period, but you paid 30 million. Okay, which means your accrued salaries or expense is this 20 million. It is a liability. Your employees are demanding salaries worth of 20 million, so it becomes a liability. Also to bring out as I was explaining, liabilities, current liabilities. Which other current liability comes to your mind? I hope I'm not leaving out something important for this stage. Remember, it is a bank overdraft. A bank overdraft happens when, for example, you have money on your bank, in your bank account. Let me use, you have 20 million in your bank account, but you need to maybe pay a supplier. You're transferring money to a supplier and you need 25 million. Given your relationship with the bank and how you've been performing as a what? As a customer, and they are sure that your transactions, you have these daily transactions or weekly transactions where they are sure this kind of money is going to come in within a month or within weeks, they can consider giving you a bank overdraft of that 5 million. And they will transfer that 25 million to your supplier. So which means you have the bank of 5 million. So you find, for our financial accounting, you're going to find scenarios where someone has expensed their bank over the amount that the bank received. The bank received maybe 20 million and they've expensed a total of 25 million. How did that happen? That automatically will indicate they got a bank overdraft, because you're not seeing a loan anywhere. You're not seeing a deposit from anywhere to that bank account. It means the bank gave them an overdraft. So a bank overdraft is also a current liability because it's normally settled within the shortest time possible. Non-current asset and non-current liabilities, sorry. But also there are scenarios where a bank overdraft can be a non-current liability actually. But it is usually a current liability. I don't think there is a bank that is lenient enough to give you an overdraft for over a year. So here we have long-term loans. I'm taking time on this. I'm not rushing you to the solution of Lokodo because I want you to have this in mind as we move forward. So on this side, we shall have sales, which move hand in hand with the expenses. We shall have sales. And here we have like, they are also called, it's also referred to as revenue, or we can say money from selling goods, stock services, or some businesses trading services, like you accountants, lawyers, doctors, all that. Then we had equity. We had equity, this is 2, not 3. We had equity. So equity, or actually, let me start with capital. Capital stroke equity. We have share capital. This is money. I'm using the simplest terms so that you don't forget. Money from shares bought or sold to shareholders. Then we have capital introduced by business owners. Pardon me once again, my network is bad. I don't know whether you people, your network is bad nowadays. I think it's because of the weather. So when you borrow money for business purposes, maybe a friend has given you money. We are seeing those scenarios. Money from acquaintances, maybe a short-term loan from a short-term loan from the bank. It is a current liability. I've explained the accrued expenses. So if you keep on just adding, maybe you're supposed to pay people salaries and every month you keep on defaulting. you credit that liability. You've received a bank overdraft, you credit. Revenue, you're selling, you're making sales, long-term loans actually, skipping this. Long-term loans from the banks, you credit that liability. When you pay off the loan, you keep on paying the loan, you debit. So the same here, when you pay out, when you pay your creditors, you debit your trade payables. When you pay off this loan, you debit. When you pay those salaries, you debit. When you pay back the bank, you debit, okay? So revenue, when you sell, you credit your sales. Please note, you credit them, you don't debit them. And this doesn't have the other side. It also goes to your income statement or profit or loss, we shall see as we deal with the T accounts. Capital, when shareholders bring in, when you sell more shares to shareholders and capital comes in, you credit your share capital account. When you introduce capital into your business from any source, you credit your capital account. Are we together on this other side, the credit side? Please confirm. Then we can head to Lokodo's journal entries. Are we together?
I beg pardon on the asset side. Now,
I beg your pardon?
on the asset sides,
Yes.
I have not understood. I came late, but I have and I beg your pardon the asset side.
You have some
Yeah,
background
there is
noise. I'm not getting you well.
pardon.
You have some background noise. I'm not getting you clearly.
On the asset side, I actually came in late, madam. I do it, but I came in late. But I beg your pardon on the asset side of the lady.
Okay. All right. Salome, can you just help me hand over those host rights?
Hello?
Someone has my host rights. Salome has my host rights. Just mute, then I give you the explanation.
Yes,
Dennis,
madam.
Mute, and I talk.
Now, when it comes to this side of number 3, drawings. Okay, I'm not understanding this money taken out by business owner from personal use, for personal use actually. That's what I'm not getting.
Kindly mute, then I explain to you because I'm receiving feedback from your side.
Okay.
Thank you. Then Salome, please hand over the host rights if you can pass them on to me. Because when I went off because of the network challenges, you took over the host rights. If you're not able to, just log out and log in again. So Dennis, these drawings, normally business owners take out money for personal use, i.e. someone will have a business and it is selling goods, so it's earning revenue or it's selling services. But his children will need school fees. And people do that. Your accountants in people's businesses, you know that happens, or organizations, that happens. So when they take out money for matters that are not business related, they are not paying suppliers, they are not paying bills at office, they are not buying fuel that is meant to facilitate the movement of maybe staff or delivery of goods. They are repairing their personal cars, they are what? All that happens. That's what we call drawings. You're taking out money for your personal use other than business use. That is the meaning of drawings. That's the meaning of drawings. Do you get it now? Dennis, are we together on that? Okay. I don't know whether he's able to hear me, but I think he has the point now. We are waiting for Salome to come in. I think she's not yet back. In the meantime, let me reshare the question. Let me reshare the question as she gets in, because we are going to be referring to it as we deal with the journal entries. Okay, I think she's back. Okay, she's back. So let's start off with the journal entries. So like our presenters told us, we start off with the title. We start off with the title. Let me hope I am sharing the right. Okay, so we shall have our title, Lokodo Enterprises or Lokodo Eric Enterprises, journal entries for the month of August 2020. And we shall have our date, particulars, debit side, credit side. And on the first date of 1st August 2020, we are told what happened here. What happened? We go back. What happened? On 1st August, introduced cash for the business of 5 million, opened up an account in Centenary Bank for the business and deposited on the account part of the cash amounting to 2 million. Now, this 2 million is part of the 5 million. First of all, he received this 5 million in cash, then went ahead to deduct 2 million, this 2 million, from this 5 million and deposited it in the bank immediately. So our journal entries are going to be very simple. Our journal entries are going to be we shall debit bank account, debit bank account with 2 million, because remember, we immediately banked it. You remember me noting that the other time? When you immediately bank cash, you take it to the bank immediately. Then cash account will retain the 3 million. And we shall credit, since it was capital introduced, and we've said capital is on our credit side. So when capital is gaining, we credit it. We shall credit capital with the entire 5 million because it was all for capital. Those are the entries for transaction number 1. Number 2, on date August 2nd, he paid rent by check of 800,000 shillings. This one we've seen multiple times. We have seen multiple times. Rent is a what? It's an expense. And we've said when an expense increases, we debit it. So our rent account, i.e. the expense account in quotes, we shall debit it with the 800. Then this money came from the bank. So the bank is losing. We shall credit the bank with the same amount. Kindly note we are dealing with double entry. You're not supposed to reflect only one side. When you tell us what is debited, go ahead to tell us what is credited. Don't tell us only one side. So number 3 rather, on August 3rd, bought goods on credit from Abiriga of 1,520,000 shillings and Itu 2,140,000 shillings. So we have our total purchases from adding up 1,520,000 and 2,140,000. Please kindly give me the total of these two. 1,540,000 and 2,140,000. What is the total?
3,660,000.
3,660,000. Okay. Are the rest of you getting that on your calculators? Try it out. Try it out because on your own you'll forget. Okay. So we have our purchases account. We have our purchases account with that total of 3 million. Since it happened on the same date, you don't need to separate these two. Remember, it's one account being affected, which is the purchases account. So you don't need to debit purchases with Itu's sales to, or rather purchases from Itu. Then also at the same time, you go back debit purchases with the Abiriga's purchases that we made from Abiriga. So since it happened on the same date, to save time and to have your smart work, you come here, just tell us, of the 3,660,000, Itu's account will be credited with what he sold to us on credit. Then Abiriga's account will also be credited. Since it's a liability, we are crediting because it is a liability. It's a trade payable. It's a liability. Please note that. That's why we are crediting these two. They are liabilities to us. They are trade payables. We have to pay them. They are demanding money from us. It is not our money. We are selling their goods. We are getting money from those goods, yet we didn't pay them. Okay. So let's see what happened on the next date. So on 6th August, sold goods on credit to Lamek of 4 million shillings and Kamoga of 3,120,000 shillings. Kindly get me the total of 4 million and 3,120,000. What is our total?
7,120,000.
7,120,000. Hopefully we are all getting the same. So these guys are debtors. We are selling goods to them. So they are our assets. They are trade receivables. So we shall debit them. We shall debit their accounts. We shall debit Lamek's account with the 4 million. And go ahead and also debit Kamoga with his 3,120,000. Since they are all sales, we don't need to separate them. We shall go to the sales account and credit it with the total. Remember, we have sold. Even if we've sold on credit there, it still sells. Don't think that we shall only recognize sales that have been made in cash. No. Whether on credit or cash, they are all sales. So we shall credit our sales account with the same amount. Okay. What is our next transaction? What's our next transaction? On 17th August, made cash drawings of 3,040,000. This guy felt like drawing some money for his personal use, because they are not telling us the money that he withdrew was for what. Yes, please.
Madam.
It's 10. I'm not getting you well.
You have skipped a transaction on 10th.
Okay, thank you very much. Thank you. So on 10th August, he sold goods on credit to Chagulanyi of 1,640,000. 1,640,000. So this Chagulanyi was a good customer, though he could pick goods on credit. So for us, it increases our current assets, which are our trade receivables. And Chagulanyi is a debtor to our side. Chagulanyi. $1,640,000. So we shall come and credit our sales account with this amount. Okay, so let's go to 17th August. 17th August, where he made drawings. They're even silent. They are not telling us where the money went. Actually, he just picked money. So we shall debit 340. Then, where is the money coming from? Cash. Actually, what I want, a tip that I want to give to you as accountants in organizations, Don't quarrel with your bosses. Don't even start pulling ropes with them. Have your drawings account. Always have your drawings account. The boss will come in, ask for money. I want money for this. Actually, they will not even tell you that what's the use of the money. Like, they know they have the right to that money. So you note, if the system allows you to acknowledge, let them acknowledge somewhere. But for you, have your drawings account. Because at the end of the day, you have to present a report to them. And trust me, I don't know whether it happens to you, but trust me, they will be like, where did this money go? Yet it's them who took it out. But if you have your smart drawings account, you will be able to present your work smartly. Your reports will be smart. And also we shall see, when we shall deal with the reports, we shall see how we shall be reflecting those drawings in our final reports. So for you, you just keep on, when he takes out, you indicate, or she takes out, you indicate. For personal use, you indicate. So at the end of that period, you're able to present, okay, now this is our drawings account, this is what went out for your personal use, which you didn't tell me the purpose was, because it is neither in the business expenses. We don't know where it is, but it is his money anyway, it's their money, and you don't want to pull ropes with them. So even if it is an auditor to come in, or if you're preparing for audit and you have to clean up your work, it will be easier for you to clean up your work if you have your drawings account in line. Because remember, they will want to what? To doctor those reports. But if you don't know how much was drawn out and how much was expensed in the business, where are you going to start from to prepare those accounts for audit? But also on the other side of audit, if you're an auditor, those are some of the things you need to look out for. You'll find expenses that are well blown up, but it is not equating to what is happening in the organization or business. It means people have been making drawings for personal use. They've been making drawings for personal use. But also for tax purposes, any expenses that are not business related, for that, we are talking about that particular business that we are preparing for taxes. Those expenses that are not business related are non-allowable deductions. We have to add them back for tax purposes. We add them back to the profit, to the net profit, which means they will increase your profit, hence increasing your taxes. So if you're not a smart accountant, to always separate these drawings, and your bosses can make their final decisions. Because at the end of that, actually, they make the final decision. You're the advisor, you're there, and you're working, and you get frustrated. But if you have them smartly laid out, you leave it up to them to make the final decisions on how they are going to handle those expenses. That's a tip. Yes, Ian is asking, can drawings be from the bank? Yes, very much. Most of them are from the bank. Because most cases, business owners are the ones that sign on those bank accounts. Accountants rarely, especially, I'm talking about organizations or businesses that are not so much into the corporate world and all that. But also corporate world, sometimes it happens where accountants can't even access those accounts, or they can be agents to them, or they can be other signatories and the mandate is different. Two other signatories can sign without you knowing. So yes, drawings can also happen from the bank. So for you as an accountant, when you recognize a transaction you don't understand, you smartly put it in drawings. So that as you're presenting reports to management, it is not on your head. That is something I wanted to bring out for your professional work and as practitioners. But as you're also going to be auditors, you're going to do all that. So that's why the financial standards give drawings also attention, because it is something that happens in day-to-day business. So let's go to another transaction. Pardon me for going off the course, but it was important. I could have forgotten. On 20th August, goods returned by Lamek worth of 320,000 shillings and Kamoga 360,000 shillings. So these are sales returns. Remember, Lamek and Kamoga are our trade receivables. So when they return goods to us, we credit their accounts, because in the first place, we debited their accounts because they are trade receivables, they are assets. Now, if they've returned goods to us, we are going to credit their accounts. So we shall go ahead on that day. Shall go ahead on that day. Shall make our returns. In what? Count. And it will have the total of the two people who rejected our goods. Maybe they were damaged or something. Then we shall credit Kamoga account with 360,000. Then we shall go ahead also to credit Lamed with 320,000. So the next transaction on 24th August, they settled the accounts of Abiriga and Itu by check, less 5% discount. So let's see how much Abiriga and Itu were demanding from us. Where are they? They are here. Abiriga 1,520,000, Itu 2,140,000. So I need the 5% of Abiriga and I need the 5% of Itu. Quickly in the chat, give me the 5% of, just put Abiriga, the amount in 5%, Itu, the amount 5%. I'm waiting for those answers. Help me compute the 5% discount. Bruce, I don't want the less amount. I want the 5% itself, not less 5%.
It is both of them is 180,000, 180,000.
Okay. So since we've computed the 5%, for the discounts, we are not going to aggregate them. We are not going to add them up. We shall deal with them individually. We need to reflect these discounts. Remember, they are from separate suppliers. So we shall get a Biriga. We shall get a Biriga. Shall get a Biriga and debit him because he was what? A creditor. He was demanding money from us. Now we are paying him off. We are going to credit him with the 1,520,000. Then we are going to come ahead and credit discount received because the discount received, sorry, I've put the 1,520,000 in the wrong place. Please note, a discount received is an income of a sort. That's why you credit it. It's like as if we are receiving an income, but it's not an actual income. Discount received. Then we shall go ahead to credit, our bank account. With the balance of 1,440,000. Okay. Then we shall do the same for E2. E2, we shall debit him with the 2,140,000. Then we shall credit discount received of 107,000. Then our bank account, we shall also credit it 2 million, because this is the actual money coming out of the bank, not the entire 2,140,000. We only credit the bank with what has come out. Kindly note, these discounts received are an income of a sort. You're receiving, but it is not actual income, but you're receiving on your end. But also discounts received, they are decreasing your purchases or decreasing your, I think, yeah, they are decreasing your purchases. We can stick to that. Discounts received, they decrease your purchases. How much you're reflecting in your purchases. So it is just that you credit discounts received. But the main thing is they have that income sense you're receiving. So on 25th, I'm not going to go back to the question. I don't want to drag you so much. So on 25th, they sold goods, I think, to Kyagulanyi by cash. And so let me just go through all these other remaining transactions, then we go to the journal entry. So they settled Kyagulanyi by cash. Then on 26th, Lamek settled his account in full by check. On 27th, they paid rent of 200,000 by cash. On 28th August, they paid motor expenses in cash. Please note expenses. Expenses. It is not an asset, it is a what? An expense. They bought another motor van. Now this is an asset. They bought another motor van, paying by check 10 million. Then they paid salaries by check of 1,120,000. So let's go to our journal entry and input all those entries. So we paid Kyagulanyi or Kyagulanyi paid us. Kyagulanyi paid 1,640,000. Remember, he was a debtor. So we shall go and credit his account with that 1,640,000. Then on 26th, Damek also paid us through the bank 3,680,000. So we shall credit his account. $3,680,000. Then on 27th, we paid rent. Rent is an expense. 200, but they paid by cash. So the account affected here is the cash account. 200,000. On the 28th, they made motor expenses. Of 260, and from the cash account 260. On the 29th, they bought a van which falls on the motor vehicle. Motor vehicle. $10 million. This is an asset, and it was through the bank. Paid through the bank. So the bank will be credited. Then on 30th October rather, they paid salaries. So we have a salaries account, 1,120,000. Then it was through the bank. Bank account of 1,120,000. I want us to balance off this. I need to work it out with you. What do we have here? Isn't it balancing? Why didn't we write the right total? The right figure, something is not balancing off. 260, 380.
Your figure for Abiriga, it would have been 1,454,000.
Birga, that is which date?
It is 24th. 1,444,000. No, 444. 1,444. No, it's 1,400,000 40. No, 44.
1 million.
444,000.
Okay. Right. All right, thank you very much. That's what was bringing the imbalance. So I'm going to share the solution with you. So our total is this, 39.8. Friends, are we comfortable with journal entries? Okay, you may not be completely 100% comfortable, but you can just type your percentage in the chat as we conclude, because we are going to handle ledger accounts next. And the ledger accounts come from your journal entries. Or ledger accounts are the T accounts actually. And from the T accounts, we shall go to the trial balance. Are we comfortable? At what percentage are we? So that I know as we move forward. Okay, I mean, see 65%. I'm waiting for the rest. Just gauge yourself, because that gives me a what? Momentum for the next session. Gloria, 75%. Okay, we have Nicholas, 53, Ian, 40. Okay, 75, 50. What about our other colleagues? I need a response from everyone so that I know how to handle your next session. I'll not come back to this, but it means I'll keep on referring back to it. Okay, we have Martha 80, 50, 70. Okay, so I can say averagely we are between 50 to 70%, which is not bad. And for some of us who are not yet really comfortable, please don't despair. You're going to pick up. The more we practice, you pick up. What I encourage you, please ask questions. Where you don't understand, ask me to clarify. Always feel free to ask in the inbox, here in the chat. In the chat box, please ask. After the session, you can ask. You can raise up in class and ask where you don't understand. Yes, please. Yes, Nicholas.
Now, my inquiry is, thank you for the session so far. My inquiry is, if, for example, entering these particulars, and instead of, my question is, does the arrangement of the transactions matter? For example, if I start with the somewhere we did about 3 transactions. So if I start with let's say Lamek, then I bring the bank after, or I start with, does the interchanging really affect the transaction since it's done on the same day either way?
So what are you bringing this example here? Are you talking about this? Or it's
Okay,
another
maybe Okay, maybe that one, it's the same. Assume I start with the Lamek first before then I go to the bank account, or I start with the bank account the way it is here. Does the order really matter?
Are you talking about a scenario where you have more than one double entry?
Not that per se, even with these two transactions, of course, for example, this particular one on 26th, where we have a bank account affected and Lamek account affected. So assume I start with Lamek account and I do my crediting, then I go to bank and I do my debiting and continue.
It doesn't matter as long as your debit comes first. That's how that's how the layout is made.
Oh, the debit is supposed to come first.
Yes. So
before
if
the
you
credit.
yes, if you recognize your credit before the debit, it is okay. You go ahead, put your credit here, then your debit. The order matters.
Okay.
Yeah, the order matters. Remember, you're starting in your columns, you're starting with your debit, credit, but also your T accounts, the debit is this side, the credit is this side. So for smartness, you maintain that. But also for your trial balance, you're going to see the final thing that we shall prepare, the trial balance, which will be the kind of report that takes us to the final report. The debit is here, the credit is here. So it is crucial that you keep that order.
Oh, fine. I get it now.
All right. Okay. Yes, Babira, it's okay to present your account as SC, but where you have time, you can write full account, but trust me, in the exam, you'll not have that time. Return outwards, do we credit? Return outwards. Yes, we credit. Remember, returns outwards affect purchases. You made purchases and debited. So when you return goods to your supplier, you credit. You credit those return outwards in your purchases account. Actually, that is in the purchases accounts in quotes. So for example, which supplier do we have here? Itu. If we return goods to Itu, this guy, Itu, if we return goods to him, we sold, we purchased here. We purchased these goods from Itu and Abiriga. Actually, let me add them. So if we return goods to them, it means those goods are no longer part of our purchases. We shall credit. We shall credit. Okay. If we don't have any other inquiry, allow me to stop here. Next week, we shall be starting on your ledger accounts or T accounts, which will take us to the trial balance. Hopefully, we shall be done with those two by the end of the week. We shall see how we move. So I'm going to share this solution with you. You can go back and revise and look at what you didn't understand well. Have your questions for the next session. Like I've encouraged, always feel free to ask, please. I want you to understand these things in the simplest way possible. All right. Our session will end here. Have a good night. So Saubaya, I'm kindly asking where we got the 3,680,000 on Lamek on 26th. Okay. Lamek. It's what he paid. It's what he paid to us. Let's go back. Settled his accounts full by check. he returned goods of 320. So by you seeing that?
Yes, I am. I see.
Okay, that's what brings us 3,680,000. Okay. Have a good night.